all that is a buy rating doesn't translate into a gain. A whole host of stocks have a buy rating, but not too many gains. Soumeet has a detailed analysis. Soumeet, very quickly.
Well, yes, there are around 6,200 companies that are listed in India, but only 317 have analyst coverage of more than 10. Now, out of these 317 companies, there are 12 companies where all the analysts that are covering the stock have a buy rating. But of these 12 companies, 5 of them have given a negative return so far on a YTD basis, despite the fact that all of the analysts that are tracking the company have a buy rating. So, which are these companies? First on the list is Piramal Pharma, which has fallen nearly 24% on a YTD basis. Then it's REC, down around 22%, Sunteck down around 13%, PFC down around 8%, Jindal Stainless down around 3%. Now, these companies have nearly 12 to 14 analysts covering the stock, and all of them have a buy rating. And despite that, we have seen such kind of a downtick on a YTD basis in these companies. However, if you look at the return potential, for Piramal Pharma, it stands around 30%. REC around 37%, Sunteck 39%, PFC 25%, and Jindal Stainless 9%. So here's a look at what led to this downfall in the share price of these companies and what's the outlook going forward. Firstly, when it comes to Piramal Pharma, what's been dragging Piramal Pharma, it is the weak set of numbers that came in, the conservative guidance that the company has given, and the US tariff concern that has been dragging the share prices. But on the positive side, the cheap valuations, the company trades at a 60% discount compared to its nearest peer. The fact that company could see a potential rebound in FY27 earnings, and the growing product pipeline is keeping analysts bullish on Piramal Pharma. When it comes to REC and PFC, what led to the underperformance? Firstly, it was the weak outlook on loan growth, higher prepayments that remained, higher prepayments and higher asset provisioning on discoms that are seeing rating downgrade led to that has been dragging the share prices for both these power financiers. But on the positive side, it's the fact that cheap valuations are continue to remain cheap for these companies. They aim to have a net zero NPA by FY26 end, and the uptick in thermal capex is something that is keeping analysts bullish on REC and PFC. When it comes to Sunteck Realty, the fact that the second half of financial FY25 was a weak set of numbers. In fact, Q4 revenue, EBITDA and PAT declined more than 50% is something that has been dragging the share prices. Apart from that, the cash collections has been lagging pre-sales, which means that cash collections have been muted, is also something that has been weighing on the share prices. However, on the positive side, the strong launch pipeline, given the fact that their gross development value for FY26 stands at around 8,300 crore, and their asset-light model is something that has been keeping analysts bullish. And lastly, when it comes to Jindal Stainless, why the company has been underperforming, the fact that there could be a potential dumping by China amid the lack of duty protection that we are seeing currently is something that has been weighing on the share prices. There is lack of visibility on the export market growth, and margin decline is something that has been weighing on the share prices. However, on the positive side, analysts are bullish given the fact that the capital expenditure of the company will increase their capacity by nearly 40% by FY27. There is raw material security, and there could be less volatility when it comes to input costs going forward. And lastly, is cheaper valuation, and given the fact that company's volume is expected to grow at a CAGR of nearly 10% over FY25 to FY27 is something that has been keeping the analyst community bullish when it comes to Jindal Stainless.
Fantastic piece of research. Soumeet, thanks so much for doing this. And of course, we'll bring this to you during the course of the day as well.